So let's think about this. You had $1 million stock portfolio. You're going to take $100,000 of that money and short UVXY with naked calls, but you're going to be smart about it and you're going to divide your money by 4 pieces. So you really only allocated $25,000 to layer 1. You would think that this would be enough to protect you, right? As many of you who watch my live streams know at this point, I've warned many times against selling naked options on volatility ETFs. There's traders out there that think it's a good idea to sell naked call options on UVXY, for example. Unbelievable. There's way too many fake Twitter traders out there that are absolutely ruining people's lives. And I tell traders who do this, look, you'll probably get several months in a row where it seems to be working out, maybe a few years. That's how short premium works. It is a high probability trade. But at some point, the party's going to end. That's why those options are priced the way that they are. Now, the number one response I hear to this is, well, all you have to do is reserve about 3 to 4 times your cash so that you can layer trades and defend the first position when things go badly. Oh, is that all you have to do? Really? Okay, let's test that theory. Let me show you how fast you can lose $1 million if you actually follow this unbelievably reckless strategy. So this is what a long-term chart of the UVXY looks like. This is why everybody wants to try to short it. And yes, I 100% agree. I absolutely think this is a very good opportunity. I have several short volatility strategies that take advantage of this decay factor. But selling undefined risk naked options is not one of them. There are many way better ways to capitalize on the short volatility trade. But what we're going to do here is actually go through an example of shorting naked calls on UVXY. And like that person said, we will just use one of those layering systems. Now, quick note, obviously I can't make one YouTube video and cover everybody out there's strategy. I am going to have to piece together what I think best represents the average of all of these traders. You might think to yourself, well, no, I would divide it into 4 or 5 pieces, or I would sell out of the money options, or maybe I would do the weeklies. I have to show an average of all of those, but just know that all of them would get crushed equally badly. It's just as much a bloodbath no matter what variation you use. But we're just going to use the pandemic. So we're going to enter UVXY here, and then we will go back to, say, February 15th, 2020. Let's see what date that is. And also, I'm going to use the monthly cycles. Let's just go right when that monthly cycle resets. So that is right there. This is the turn of the new cycle. So we would do 1 month out. Let's do 28 days till expiration. Again, like I said, obviously during the pandemic, these weeklies would get absolutely destroyed. Let's give the person a little bit more time. Let's make sure they have time to apply their risk management. We're going to use this March cycle. So if we go into here, we are going to choose one of these strikes. Now let's go a little bit out of the money. Let's say we'll start with this 15. So we're going to sell a single. Now, as far as margin requirements go, for naked short options, there are different ways that different brokers will calculate it. A good baseline that'll capture the average of what most people will see, we could say about 50% of the value of the underlying. Now, there are certainly brokers that'll go down as low as 25%. You've probably seen those formulas, 20% of the underlying plus the option premium. You can maybe get away with around 30%, but just remember that when volatility spikes, all of those brokers are going to radically increase margin requirements. It is a good idea to just use 50% right from the start as the number. So let's start with a person who has a $100,000 account, and they're just going to go ahead and use one of these layering systems. They're going to put $25,000 to work in the beginning on their first layer trade, and the other 75% is going to remain in cash ready to defend the position. Now, hopefully it's clear to all of you who are watching this, this is a terrible way to short volatility right away for that reason. During those times where you're actually getting winning trades, you have to remember that only 25% of your capital is going to be allocated. And selling calls is already just bringing in pennies. So you're essentially bringing in pennies on the dollar on just 25% of your account. Like I said, there are many ways to short volatility far more effectively than this. The goal for traders should be to get the most amount of money to work as possible in the safest way possible, so you can really get some bang for your buck. This 25% layering system is terrible right from the start, but people think it's a safe way to sell naked calls, so let's keep going. So this person has $25,000 for their first layer. That means that on average, let's give this person about 41 contracts to start with. So I do want to note, this is going to be important later on. Remember, the best case scenario, if this trade goes well, this trader will make about $4,000. They've got $100,000 to work with, but they're only layering 25. So best case scenario, they're making $4,000 on their 100. But let's keep going. So the person probably thinks it's a relatively uneventful month. Clicking forward, this is the weekend. They come back on Monday and the UVXY has gone up a little bit. Now, it's perfectly normal for it to go up about 10%. That's fine. They're not going to add their next layer just yet. But if we go down here, we can actually see this person is already, after the first day, down $6,200. Again, not time to panic, but that's a lot of money to be down after one single day. Let's keep going. Tick forward, it went up again. Now, if we check February 25th, this trader's already down $14,760. After 2 days, they're down 15% of their entire account value. Remember, they were trying to just make $4,000. Now they're down 15. It's definitely time for layer 2. So if we go out here, we can just choose any of these, a little bit out of the money, just because I think that's what a lot of people do. And again, margin requirements will mean that this person now probably will get about 33 contracts open. So great, remember, for these types of strategies, in order to make any money at all, you do need to get your second and third layer going. You probably won't feel very comfortable going to the fourth layer, but the second and third layer, this is just part of the strategy. Everything seems to be going well so far. Okay, so let's tick this forward. Well, now it's up again, another big jump. February 27th, February 28th. Big move, and now if we look at the 28th, this person is down $39,500. This plan of saving layers for protection doesn't seem to be going very well, does it? You imagine trying to make $4,000 on your money and find yourself down $40,000 after a week? But no problem, we've got 2 more layers. Let's sell the third one. Let's do these 25s. So now margin is getting a little more inefficient, but we can still get 22 of these going. As long as the UVXY makes a recovery here, we're actually going to make a bunch of premium when we cascade forward with a bunch of winning trades, right? This is what people think is going to happen. Okay, no problem. Let's tick forward. Going through the weekend, we come back on Monday and not much was changed. So now March 2nd, let's find where that is. Now they're down 27,300. Coming from 40 down to 27, they probably think this is going in the right direction. The plan is working. All I had to do was save capital so I could add layers. Obviously, everybody knows the UVXY doesn't keep going up forever, right? Hopefully you're hearing in my voice, I'm layering on the sarcasm pretty thick here. I've known for over a decade this is a terrible idea, but let's keep going. So now we'll tick forward again, another massive up day. Let's keep going. Another recovery day. Boom, a big up day. Now we're in trouble. March 6th, wouldn't you know it, I went from being down $40,000 to being down $126,800. There is no level 4. We're done. Not only did we lose our $100,000, we would owe the bank $26,000. Making this kind of mistake will ruin your life. Do not be fooled into thinking just because your account value goes to 0 that you're off the hook. Now sure, yeah, it sucks. You have to go back to work Monday morning with no money in your account. But your broker will also want their piece of the pie. They will have margin called and liquidated you by this point, but you don't just get to skate free. But anyway, let's keep going. Let's say this $100,000 that you allocated wasn't all your money. This was just your short volatility money. Let's say you've got an actual account value of about $1 million. You only allocated 10% of your capital to this dumbass short call strategy. All right, so now we're eating into things a little bit here, but we can go ahead and sell another layer. This is fine. So let's go ahead and sell this one. Well, now I can get myself about 18 contracts, and it's March 6th, so now we can keep going. Let's go through the weekend. This is not going to be pretty. You come back Monday, March the 9th. Well, now we're down $241,000. At this point, people are probably thinking, well, I can't sell it now. I would just be locking in insane losses. All right, let's keep going. March 10th, big devastating day. 11th, 12th. This is not getting better for you. Now we're sitting March 12th, we're down $445,000. You burned through your $25,000, you added 3 more layers and burnt through your entire $100,000 for your short vol allocation, and now you're burning through the rest of your stock portfolio and you're down $500,000. So you're halfway there. Now we need the trading gods from above to just shine down some glorious luck. Let's see if they give it to you. Keep going, devastating up day. Go through another weekend. Come back March 16th, this is a disaster. Now we are down $750,000. Well, you've made the mistake of a lifetime. They're going to make a movie about you at this point, so you might as well just keep going. Give it another couple of days, and right there, you are down $1 million. Your entire portfolio is gone. Not the $100,000 for shorting volatility. The entire $1 million is gone. Now, obviously, the bank would have liquidated you before this. This is just an exercise in disaster. The point is, this strategy of dividing your capital into a separate shortfall area and then subdividing that into different tranches, this doesn't work with something with the hyperconvexity of short out of the money calls. This is why people use it as a hedging instrument, because of the convexity. And you want to flip that around and actually sell that convexity, undefined risk? Now, I'm not speaking directly to you. I'm talking about your alter ego that thinks this is going to be okay. I know that if you watch my live streams, you know not to do this. Talking about those fake Twitter traders that are telling you everything's going to be fine. Don't worry, you've got 3 or 4 layers. You can sell that later. Don't worry. You tried to make $4,000 selling a naked call and you lost $1 million in a cascading failure downward. And let's not forget, the government went through extraordinary lengths to make the market stop crashing when it did. The next time this happens, this might not be just a 2-week crash. This could be a 2-month crash, maybe longer. You know, the financial crisis did happen. The dot-com bust did happen. UVXY can just keep going up and up and up, weeks and weeks on end. So again, please stop listening to these clowns on Twitter. Remember, they are not going to subsidize your trading account losses when this happens to you during the next market crash. All you'll hear from them is, wait, what? No, what do you mean, me? No, I didn't say naked calls. Who would do that? And then they're going to block you and pretend the whole thing never happened. Don't risk your financial future for some idiot on Twitter who's just tweeting for engagement. Protect your capital. Defined risk always. So for an extensive volatility metrics dashboard updated daily, and to see all of the live trades for our tactical rotation and option strategies, click this link right here and claim your free trial to the VTS community. You're always welcome to join us anytime. See you next time.